next speaker is from Tharisa, Mr. Fivas Barubis. He could tell us more about Tharisa.
Hopefully. Good evening, ladies and gentlemen, and thank you to African Mining for hosting us again this year. I think importantly, year on year we've come a long way as a new company in the PGM and chrome space in South Africa. I think most importantly, and it's on our tagline here on the front page, is that we're a profitable, low-cost co-producer of platinum group metals and chrome concentrates. So I thought I'd start off the presentation today with a diagram, or a clock I should say, from Investec Securities that talks about the crash and boom cycle of commodities. And I thought this was very interesting, and it really talks to where we are today and what we see. And if you look at the clock, 12 o'clock being the crash time, and 6 o'clock being boom time, and what happens between crash and boom times. And you can see, and you can relate to a lot of public company announcements as to the cycle that we find ourselves in at the moment. So the first reaction post a crash is an initial shock. Then there's cost-cutting measures that are announced and effected within the industry. There are company liquidations. We've seen business rescue cases in South Africa, ongoing, some successful, some unsuccessful. Dividends get cut, assets are written down, impairments. And then we start seeing something very important, which is metal prices start to stabilize. And then we start seeing takeovers, cautious buying, and M&A activities. We see debt levels falling within the mining industry, and then guess what? We're back into a boom cycle again. I'm not going to go through that 6 to 12 o'clock hours, but I think where we are now is between 3 and 4 o'clock in this clock. The question is, how long is this hour between 3 and 4? It feels like it's fairly protracted. However, in our space, in PGMs and chrome, we really believe that maybe we're at the bottom of this cycle. If you look at Reuters, they're looking at calling the bottom of the commodity cycle. You've got the MMI trend there. You see some plateauing towards the end of the basket of commodities in terms of price stability. And interestingly enough, LBMA's forecast for PGMs and gold for 2016 are quite encouraging. And importantly, today we see platinum trading at around $930 an ounce, which surpasses even LBMA's forecast for 2016. So are we seeing the bottom? Are we seeing the beginning of a new cycle? We'd like to believe so, and we're very hopeful that this is sustainable, and we see platinum, palladium, and gold at these levels for the rest of 2016. But I think more importantly, let's talk about Tharisa and why now is the perfect time to invest in this company. First of all, we're the only co-producer of platinum group metals and chrome concentrates listed on the JSE. We have a huge resource of some 828 million tons, of which 100 million tons is reserve, which gives us our competitive advantage of having an open pit life of 20 years. Thereafter followed by another 40-year underground life of mine. It is one of the world's largest single chrome resource mines, but importantly we have a small labor force, we have a mechanized, skilled fleet that mines the open pit. We are giving guidance that for 2016 we'll hit steady state production numbers on an annualized basis, and that means 144,000 ounces of 60 PGMs and 1.5 million tons of chrome concentrate. Importantly, our CapEx has been spent. We've de-risked this project and there's no ongoing major CapEx. So we can sustain these production levels for the next 20 years without any major CapEx requirements for the business. And all of these factors lead to the low-cost position that we find ourselves in the PGM space and in the chrome concentrate space. So we don't pass credits from one commodity to the other. We run this business as a true co-product business, apportioning costs to each of the revenue streams. We have an in-house mine-to-customer solution. We manage our own logistics and we do our own marketing of our chrome concentrates. And within the footprint of Tharisa, there are growth initiatives organically, and we are undergoing a number of optimization initiatives to go beyond our steady state numbers. So what makes us different from our peers? First of all, we have a unique approach to mining. We mine in the middle group reef horizons. We mine all 6 layers of the middle group reef horizon. As mentioned, we sit in the lowest cost quartile, mainly due to the fact that we're an open pit producer and that we have dual revenue streams from a single reef cube mined. We have an innovative processing technology. We have an integrated circuit, which I'll run through very briefly later on. We have growth opportunities, and we've unlocked those opportunities already in the form of enhanced recoveries of both PGM and chrome concentrates. And we truly believe that Tharisa offers a secure value investment. The fundamentals are strong, we are robust, and we're able to maintain profitability within this market and this environment. So we're more than just a miner, as mentioned. We have Tharisa Minerals, which is the holder of the mineral rights here in South Africa, whereby we have 2 processing plants with capacity of 400,000 tons run of mine per month, giving us a production for 2015 of 118,000 PGM ounces and 1.1 million tons of chrome concentrate. We have a beneficiation subsidiary called Arco Metals, which produces higher grade foundry and chemical grade chrome products, and these are niche premium products which attract a premium over your standard metallurgical grade concentrates. We have a marketing and sales team front facing to customers primarily in China for our chrome concentrates, but a global market in terms of chemical and foundry grades. In terms of PGMs, we supply our concentrates to Impala Refining Services on an off-take arrangement. We manage our own logistics. We utilize a siding 6 kilometers from the mine. We use Richards Bay Dry Bulk Terminal primarily as the export channel for our chrome concentrates to China, and the balance is trucked or containerized via Durban. We have a number of long-term agreements in the form of agency agreements and supply agreements. So where are we located? We're located in the western limb of the Bushveld complex. Our neighbors are Lonmin, Aquarius Platinum, and Samancor Chrome. Our mining right covers some 5,500 hectares, and which leads to the open pit that yields the 4.8 million tons run of mine production. It is split into 2 distinct pits, the east and the west side, and as mentioned, the mineral reserve is 100 million tons, giving us that 20 years open pit life. If we look at our processing, and this is a simplified schematic, we have an integrated process whereby we crush our run of mine, we do a coarse milling stage, thereby feeding that feed into the spiral plant, producing our first chrome concentrates. The tails from those spiral plants are then fed into our secondary mill, whereby we mill finer, and that is then fed into a traditional PGM flotation circuit, whereby we produce a PGM concentrate, and the tails from that PGM concentrate, that flotation circuit, are then spiraled for a second pass at chrome concentrate. So a fairly simple integrated circuit. If we look at the trajectory of our production since 2011, you'll see that we had no PGM production, and we've slowly and gradually ramped up to 118,000 ounces in our financial year 2015. And as mentioned, we're giving guidance that we'll achieve 144,000 ounces on an annualized basis for 2016. And a similar story on the chrome concentrates. We have increased the percentage of our higher value chrome concentrate production, but there's been a gradual increase in our chrome concentrate production at around 1.1 million tons last year, and giving guidance to 1.5 million tons for this year. If we look at our operating cash flows, you'll see a nice trajectory there into the positive territories. EBITDA showing the same trajectory, and gross profits, and I'll talk more to those details. But where we are now is we're seeing improved recoveries in our PGMs and in our chrome concentrates, yielding the results that we saw in 2015. Importantly, our revenue, in spite of lower PGM basket prices, was up at some $246 million. Net cash from operating activities up 84% to $41.4 million. EBITDA at $29 million, giving us a net profit after tax of $6 million and our first headline earnings per share of 2 US cents. And that's a lot of South African cents. So we're working on a bright future. I think the design and the fact that we have an open pit mine lends itself to low cost production of PGM and chrome concentrates, and we're managing the business through the cycle. We're looking at various ways to fund our pipeline of production in the form of prepay arrangements. We've undertaken a stringent cost-cutting exercise where we are cutting 10% of operational costs as well as 10% of overhead costs, and we're looking at other facilities, alternate ways to fund our business. Looking ahead, operationally, we're looking at improving our feed grades from the open pit. We're improving and we've been successful in increasing our recoveries of both platinum group metals and chrome concentrates. And we're looking forward to achieving a stable operating environment whereby we achieve our steady state production and continue to be a profitable mining company. So our longer term strategy is to become a leading natural resources company with a very solid foundation at Tharisa. When the time is right, I think we will grow into a larger business. And thank you for your time this evening.